Hello dear traders! The US dollar index again rebounded to the 20-year highs amid market expectations of more aggressive policy moves of the Federal Reserve. Last week, the Federal Open Market Committee decided to raise the funds rate by 75 basis points at a time. Both investors and Fed policymakers suppose that the central bank will deliver more rate hikes at such a wide pace at a few next meetings in the context of a recession threat and extremely elevated prices. Market participants are again stoking fears about a looming recession. The speculations will resurface following surveys by market economists. In a series of PMIs for advanced economies, investors will focus on the manufactured PMI for Germany, the powerhouse of the European economy. Experts warn about a slowdown in business activity due to a variety of factors, such as waning demand for manufactured goods from Germany, economic uncertainty, soaring global inflation, and economic restrictions in China on the back of a COVID resurgence. Amid such fundamentals, traders are going to sell the single European currency. Experts will also highlight the negative trend in the British industry. The previous survey for May logged a decline in business activity to the lowest reading in 17 months. No doubt the UK industrial sector is limping because of disruption in supply chains and the shortage of commodities due to the lockdown in China and anti-Russian sanctions. Traders could find some signs of optimism in the speech of Fed's chairman Jerome Powell. In his testimony on Capitol Hill, he will expand on the economy and monetary policy. The market expects him to confirm that everything is under control, including inflation. Besides, they will be looking for hints about further aggressive monetary tightening. Investors are wondering whether the central bank will raise interest rates by 50 or 75 basis points at a time. Any signs of doubt will trigger high volatility across financial markets. On Friday, Japan's inflation report will set the currency market in motion from the early Asian session. The annual CPI is expected to ease to 2.3% in May. It confirms that the Bank of Japan suggested the right version about a temporary nature of inflation acceleration. Let me remind you that Japan's regulator sticks to its ultra-loose monetary policy, holding the key interest rates at minus 0.1%. In response to the inflation report, investors might open long position on the dollar-yen pair, so that the Japanese currency will plumb new depths. The US dollar will find an excuse to assert strength in the European session in light of the retail sales data from the UK. Consumer activity extended its decline in May. The report for April logged the sharpest fall in consumption since January 2021, when the UK authorities reimposed economic and social restrictions. Nowadays, despite the lack of any restrictions, the British refrain from shopping due to inflated consumer prices. The negative trend in retail sales will increase pressure on the pound sterling. In fact, consumption is sluggish also in the US. According to the preliminary data by the University of Michigan, consumer sentiment weakened in June to the lowest level in the history of conducting such surveys. American consumers didn't feel so miserable even at the time of Great Recession in 1981. The reason for pessimism nowadays is obvious: unprecedented growth of gas prices and expectations of even higher prices. To sum up, this trading is likely to finish with another sell-off on Wall Street. This is what the situation with the US dollar looks like for today. And that is all for now. Keep in touch, subscribe to our channel and share your comments below the video. See you soon!